This is another episode of me documenting the day-to-day process I am taking to achieve long-term consistency in the financial market, and this is literally my 10th take of this video, so hopefully I can break this down as I would like in this take. But today I'm up $538 on the day and I'm up $300 on the week, but that's not really what matters. We want to focus on the R multiple. So if you look at the R multiple aspect, we can see that I'm up over 4.5 times what I risk, which is good considering that on day one of this eval, I put myself in a drawdown immediately, boom, just like that. I was able to come back out of that by the end of the week, finishing out Friday with my best session of the entire week. So it's good. It's great. It's great news. Now, the only reason I was confident in actually attempting this eval in the first place was because I just noticed that I just consistently get better in my market approach. I consistently get better as an operator of my model. I'm just getting better day in and day out, so long as I continue to do the same things, the same processes each and every day consistently. I literally just get better by default. So it just shows you, guys, things get better every day. And that is true. So if you're going through a drawdown, if you're going through a period of suck right now, as I would like to call it, it has to get better. It has to get better. I mean, look how I performed this month. Today's the last day of the trading month. Look how many red days I had this month, and I only closed out the month down 2.5 R, which is not bad at all. It's not a lot of drawdown. If we focus on the R multiple amount, I had a really solid end to this month, and that made up a lot of the drawdown that I experienced. So I didn't finish in too much drawdown. So I was down 9 R before today. It just shows you how one good session can literally flip things like this. But the opposite is also true. One bad session can also flip things. Like I had one bad week where I was down 5 R. Well, one good week puts me up and makes basically all that back, and I'm only down a little bit of drawdown on the month. But on the eval, it's a pretty decent start. It's a pretty good start, so I'm pretty comfortable. I'm pretty confident that I can continue to show the same results in the coming month because I now have a process, one model that I'm just following day in and day out, and it repeats, which is the best feeling ever. Because for the longest time, I would come to the market, I would trade a certain way, and it would work, and I'd take winning trades, and I'd probably have 1 week of profitability. But then the following week, what happens? I give everything back. And then because I give everything back, I think that I'm doing everything entirely wrong, and I have to throw everything out the window and do something entirely new. Now, that's the cycle that I was stuck in for a really long time, and that held me back so much. If I just stuck with one system, one model, I could be profitable right now. Okay, so if you're doing that, that's probably a big reason why you're still experiencing the same boom and bust cycle. Now, right now, I can't really speak too much on that because right now I'm still a break-even trader, but I know I'm on my way out. Like literally, I could feel it, guys. I could tell you right now that I could actually feel it. Things are happening. Things are happening for me right now, and it's a great feeling. It feels so good because I just keep getting better. That's it, by default. Once you realize that, you just have this confidence and this belief with yourself because your action is persistent and it's consistent. Therefore, you cannot fail. It's the belief that you got to have in yourself. So with that monologue out of the way, let's get into today. So my net P&L today is $538.28, but how I felt today's market approach was completely indecisive about what could happen because it's the same thing that I keep happening when I come to the market. I know that I should do this, but I think I should do that. So deep down, I felt to be bearish today, but I thought I should be bullish, which probably doesn't make any sense to you at all as a listener, but I could literally feel it physically, internally, the feeling that I get when I know I should trade away, but I'm looking to do the opposite. And so you can even see it in my market approach if I go to the 15-minute time frame on these annotations. How this is trading away from the low of day with smooth sell side below is not bullish at all. Why would I be bullish on the day and have this annotation on the 15-minute time frame? Okay, it just, like, what are you doing? And it's the same thing that keeps happening where 10 minutes before they open, I'm literally taking a step back, looking at my market approach, looking at everything that I have written down, and I'm thinking to myself, this does not make sense at all. You need to switch this right now. But there's only like 10 minutes before the market opens, so I just go ahead and submit to the idea, which is one of the lessons that I learned today. So let's see if I reflected on it today. So I mean, I just need to do what I know I should do, right? I'm making a market approach a lot harder than it has to be. 90% of the time, I know exactly what I should be doing. It is literally a physical feeling I get internally, like my intuition telling me what to do, but I deliberately choose to ignore that, which is what I did today. I take a step back and think about the incorrect idea that I have, and my intuition corrects me and tells me what I know I should do, but I ignore that, leading to an indecisive approach. The good thing is I don't have to be right to make money because of partials. That's it. So my model is extremely dependent on higher time frame narrative and market criteria. Basically pairing those two tells me how the market's going to trade around the gap opening. I'm looking for a gap opening. In today's case, we had a discount gap opening. So if we have a discount gap opening, there's only two things that the market can do. So here's previous day settlement. Let me get new day opening gap out of the way. Let me delete this real quick. Okay. So if new day opening gap out of the way, you can see that this is where we settled yesterday at 4:15. If we go to regular trading hours, see the bottom left corner or the bottom right corner. If we toggle this on, this is regular trading hours. Regular trading hours closes at 4:15 Eastern Standard Time. So that's where the market settles, regular trading hours. And then where we open the following day at 9:30, we have a gap down opening, right? So there's a little gap that exists. So when the market has a gap opening like this, it's either going to continue trading in the same direction of the gap, or it's going to reverse and fill that gap. That's it. What else can it do? That's the only two possibilities, right? So basically, I'm getting an idea of the higher time frame narrative and market criteria to give me an idea of how I think the market should trade around the gap. In this case, I know based on what's setting up in the overnight session, the higher time frame narrative, that the market should trade lower. Now, this was a huge move. This was a huge move that I caught for over, let's see. There's a good way to, let me just show the executions real quick. Preferences. Show chart executions, okay? So I'm selling this order block right here. Taking off at this low right here, and then taking off again at Wednesday daily low. So a solid setup. I'm getting way ahead of myself. I didn't explain any of the logic behind this at all. So like I said, two things, higher time frame narrative, market criteria, combine the two, that tells me how I'm expecting the market to trade around this gap. Now, if you look at the monthly time frame, so going into the market today, the candle is basically painting similar to this. It's maybe a little more bullish like up here. So if I'm looking at the daily candle and it's painting, or the monthly candle and it's painting like this, it looks like it's going to close indecisive. It looks like it's going to close indecisive. That means that there is a potential for the market to overlap the move that it has made earlier in the week if we're indecisive. Because if we're indecisive, we're not trading directionally, we're trading sideways. We're doing this. So I'm not expecting a lot of continuation in the move from Thursday if this candle is likely to close indecisive, because indecisive is not continuation, it's sideways. That's where the market closes indecisive. So on the weekly candle, we see kind of the same thing where we just have a small range candle. If you have a small range candle, we're not trading directionally, we're trading sideways, which is basically how we traded this week. I mean, we did move directionally Tuesday through Thursday, but then that flipped. So what I've noticed is that the hardest days for me to anticipate or read are the days that overlaps the previous candle in its entirety. Like for example, Thursday settled on its high, right? And then Friday opened and completely overlapped that up candle. So these are the days that are the hardest for me to anticipate, like we have here. Because usually how I trade, I'm trying to trade in the direction of the trend, right? So usually, typically, if Thursday settles on its high, then on the following candle, I'm looking to trade down into the down candle. This down candle should support price if we're bullish, and then look to trade the market higher, which is why I thought I should be bullish today, but I knew intuitively that's not what I should be doing. Because based on other information that the market is showing me, if we look at how, and this is basically how I read the market. Okay, I'm just looking at where the candles close. But the candles close tells me everything that I need to know. So this is Friday's daily high. We see how Wednesday drove above Friday's daily high but closed below it. That's a sign of weakness. And then Thursday also drove above that high. So literally yesterday on Thursday, I was looking for lower prices. Let's go to Thursday real quick. We can see that that logic, that narrative that I was framing yesterday that did not play out, actually did play out today. So a drive above Friday high has already failed. A consecutive run on this high, and the market should break lower, especially if we have a low resistance liquidity below. You can see how the market is stacking these daily lows on the daily time frame, and that's what creates this slide lower today, because you can see how Wednesday did not take Tuesday's low, and Thursday did not take Wednesday's low, but Wednesday took Tuesday's high, and Thursday took Wednesday's high. So now we have 2 consecutive drives above a daily high without taking daily lows. You see how it's stacking these daily lows? That's what's setting up the low resistance liquidity run. And if you can see that, you can see that on the 15-minute time frame as well, because if you look back within this range, there's no solid obvious discount rate for the market to grab onto, so it's going to take that out in one quick clean move. So there's actually a lot of logic behind why the market should have gone lower today. And I want to show you guys a little bit of the process that I take to annotate these moves when they happen, so I can learn from them and anticipate them more with a higher degree of probability in the future. So this is my optimal intraday swing model study system, which is basically just a daily price action log of all the days that I backtested and all the days that are playing out in real time. Like today, it's already logged in here. I've already done my market review today, and I've basically come in here. Oh shit. There we go. I thought I deleted them before I uploaded it in here. I would have had to dig through my recycle bin and everything. But here we go. So after a day closes, and especially if it's a huge move like this, I am all over it in the annotations trying to figure out exactly why the market did what it did. So the exact logic that I explained to you guys, I'm annotating right here. It's the last day of the month. How's that monthly candle going to close? It seems it's going to close indecisive. It's going to close indecisive. I'm not looking for continuation in the move that we made Thursday. It's probably going to close back inside the range, back inside that weekly range, right? And so on the daily time frame, this is just the information that I'm noting that basically told me we were going to have a large move lower today. So the first sign of weakness is on the daily. What I was looking for yesterday played out today. You see how the market closed below Friday daily high, did not take consecutive daily lows. So if I go to my Miro board, one of the things that I use to look for reversals is the very thing that happened this week. So higher time frame narrative to frame a sell day. So anticipating a reversal lower. Price does not take previous day low on consecutive days as it trades higher. This is setting up a sell side low resistance liquidity run. Now let's go to the chart. What happened? We did not take previous day low on consecutive days, which set up a low resistance liquidity run lower. So it's just the same things that I already looked for. Here it is playing out in real time, and I executed on it today. Boom! It's such a great feeling, right? Great feeling. So I'm noting here, I have supporting details from the weekly range that tells me this is likely going to get overlapped, because note how price took consecutive daily highs, leaving smooth daily lows below, which creates this slide in price. Look at this level. It's very smooth. You can draw, a clean diagonal trend line, whatever you want to call it, right here. And we take that out, boom, one quick clean move. So on the 4 hour, the first sign of weakness is what I was looking for yesterday that played out today. How this candle closed below that candle's high. It's Wednesday, taking out Friday daily high but closing below it. And then this candle, this is my second sign of weakness. Note how when the price continued to drive higher with a perfectly smooth edge below, it eventually led to a slide lower. This candle also took this candle's high, but we did not get that breakdown. We did not get that breakdown. Usually, when this happens, when the market closes with a large premium wick like this, we get that close below. But it was saving up that low resistance liquidity run for today, Friday. And now you can see how many times we have a 4 hour candle that did not take the previous candle's low. Here, 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 and here. Here, and here as well. So now we have low resistance sell side liquidity. So it's a perfectly smooth edge from Thursday that gets overlapped with ease on Friday. This is engineering of a low resistance liquidity run. So what I'm trying to explain, or the point that I'm trying to get across here, is that when the market makes a huge move in price, I am jumping all over that, and I'm trying to figure out exactly why that happened in every single way, every single detail. You can see my chart is just littered with annotations, and I'm carrying down the annotations in the higher time frame down to the 15 minutes, the 1 minute, and that's it. So finally, how Thursday settled indicates the weekly range is capped, a phenomenon that I've seen many times. So if you look at the lower time frame, you see how Thursday suddenly closed aggressively with this down candle right here. Now I've seen this many times through testing, that this usually means that the weekly range is capped, because how Thursday settled, it closes aggressively. That usually indicates that the high of the week is in. Now you can go back and look at this, and you'll probably see this repeating over and over and over again. Not really all the time, but sometimes this happens. And it's just a phenomenon that keeps repeating. And I see it again today. It's telling me that I should be looking to be bearish. So on the hourly, heavy price action leaves obvious 1 hour sell side imbalances, buy side inefficiencies, and creates the distinction between bearish discount gap opening, and bullish discount gap opening. So like I mentioned before, there's only two things that the market can do if we have a discount gap opening. You're just going to reject that gap and keep trading in the same direction of the gap like I did today, or it's going to reverse and fill that gap. So before the market opens, I like to toggle on what playbook I think is going to play out today, and just see if the market criteria matches that. So if I go through these moves, these old moves that have happened that I've studied, you're going to notice that it's typically the same thing that plays out over and over and over again on a day where we have a discount gap opening and the market rejects that. And this is the basis for my model. So if we go to the hourly time frame here, we can see that the market just slid lower right from the Asia session as it did today. It left this 1 hour imbalance and rejected that 1 hour imbalance and traded lower, which is basically what we did today. On the hourly time frame, same thing. We slide lower right from the Asia session. We have a 1 hour imbalance that the market rejects, and we slide lower right at the open. It's not going to be identical, but it's going to be similar characteristics that make a large sell day that we had today. So in this case, not too similar to this trading day, but the same characteristics are present where we just slide right lower from the Asia session. This is August 20th. Same characteristics, right? We slide lower right from the Asia session. 1 hour gap, reject the 1 hour gap, reject the discount gap opening. So same things that tend to repeat, and this is the basis for my model. Just covering these real quick. So this is very similar to what happened today. Okay, I'm going to pull up the 15-minute chart here, and then we'll look at what happened today, and we'll compare the two, because this is pretty much identical, but this happened in 2022, okay? So 3 years later, the same thing's happening. What's going on? Why is the same thing happening over and over again? So you can see how we slid lower right from the edge of session. This is the hourly time frame. We have this large hourly down candle. Now in this case, we rejected an order block, and today we rejected a sell side imbalance, buy side inefficiency. But let's look at the 15-minute. We slide lower right from the Asia session. The market remains heavy. Note how it does this right here, how it sets up sell side. See all these really clean, smooth lows in here. Moves off the low a day. Opens, trades up, rejects the discount gap opening, and then breaks lower, okay? Now let's compare that to today, August 29th, 2025. So we broke lower right from the Asia session. We had a large gap. Instead of the order block, the last example was an order block. This case, it's a gap. Notice how we opened up off of the low day with that smooth sell side below, and it's almost identical. So this is the previous example, and this is this example, okay? So you can get a really good idea of what I'm looking for. Market criteria, higher time frame narrative, and I'm just looking for, is the market going to reject that gap, or is it going to continue in the same direction of that gap, right? I have everything mapped out here. I know what I'm looking for. So this is why I'm confident to attempt the eval, because I know I have a process that repeats over and over and over and over and over again. So I can literally rinse and repeat and catch these same moves over and over and over and over again. That's it. That's all it is. So I wish I could show you the recording from this session, but I captured the wrong monitor. This captured my monitor on the right. My monitor on the left is the one that I execute on, so it was just stuck on the 5-minute and the 15-minute the whole time, and there was no execution. But basically, what really confirmed this idea for me, I'm just going to break it down on the chart. What really confirmed this idea for me was I was looking for lower prices, correct? Well, I said I was looking for higher prices in my market plan, but I knew that was incorrect because of how the market instantly rejected the discount gap opening. It just left. It didn't even want to trade to the upper quadrant or the lower quadrant of that gap. It just left it. It just left it completely. Actually, yeah, this is the lower quadrant. Did not even trade to 1/4 of that gap and just left. Boom, stayed heavy. Then I see how the market lays a fat down candle over the low a day, and that indicates that the market's going to continue beyond that low. That indicates the market is heavy. So on the 1-minute time frame, I'm watching, I'm noting, the market opens, trades up, does not even do a 1/4 fill right here. Now notice how we had this minor run on buy side liquidity right before the market opened. And we have this change in the state of delivery right here. Buy side delivery, takes out buy side. Large down candle closes, violates the open price of the consecutive up close candles. That's a change in the state delivery. And then it stays heavy. Stays heavy. Does not do a 1/4 fill. Stays heavy, stays heavy. Boom. Breaks below the low a day. Lays a large down candle over that with a gap, which is also the first presented fair value gap of this session. So we can go ahead and annotate that in red. Consecutive up close candles. Now at this point in time, my market approach was to be a buyer, right? So I'm looking at how the market's responding to the low a day. I want to see if it shows me responsiveness, willingness to react here, to get up and displace back inside the range. But it doesn't do that. So I was looking to see if it's going to make a change in the state of delivery on the 1 minute time frame, which would be a violation of this candle's open price. This is painting as a bold up close candle. Wait, maybe I can show my execution on TradeZella. That might be a better idea. Trade replay. This one right here. Let's see if it does second by second. This is hideous. This chart is so ugly. Okay. Scratch that idea. Basically, I'm seeing if the market shows me responsiveness at the low a day. This was a bold face up close candle, right? At one point, it looked like it was going to inverse this fair value gap, but because it closed back inside of it, you see how it traded up out of it, but still respected it closing inside of it. And then the following candle was boom, a large down close candle that violated the open price of this consecutive series of up close candles. I know that's a change in the state of delivery. I know the market is in a sell program and we're going lower, seeking sell side liquidity. So I execute right there at the open price of this candle with the stop loss above the mean threshold, and I'm targeting here, this low right here. I'm looking back inside the range. Okay, I was indecisive in my approach, so the contract sizing today was only 3 contracts because if I'm following my risk management protocol, my dynamic contract sizing, today was a C day because I was indecisive. So I'm only trading 3 contracts on days I feel completely indecisive and don't have confidence in one idea or the other. So I'm going to take 2/3 of the position off at a low-hanging fruit objective. Now the low-hanging fruit objective that I identified was this swing low right here. So the market delivers that with haste. But at that point in time, I really wish I had the recording because I could show you I got a little bit greedy right here. And this thing was giving me insane feedback. Like it was just boom, lower, 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 lower. I knew that this was heavy. I knew that I potentially caught a really, really large move. So I wanted to hold for all 3 contracts for Thursday daily low, which is this gray line right here. But the market failed to stay heavy beyond that low that I wanted to intend to take 2/3 of my position off at. But I got a little bit greedy, kept those contracts on, and then it started retracing against me. At this point in time, I thought, damn, like, am I going to spoil another winning trade? Because that's a mistake that I've made so many times throughout this week where I've been up on a position, but I literally just failed to lock in equity and the trade comes back on me for break even. So if I look at my journal entry intraday, let's get out of here, and how I felt. So following ICT protocol, I felt so much anxiety and stress in that tiny retracement after I didn't trim 2 at a level I knew I should have. So when it makes a new low a day, I am running down equity. Aware of the stress I feel during an open position, it's clear I have to grow into holding for the full swing, but trimming 2 contracts instantly kills all stress and worry that I feel. Now this move is very low resistance, and I can probably hold this contract until the end of the day. So I felt a lot of stress and anxiety in the open profit position because I thought I was going to spoil another winning setup when price retraced against me. And the quick fix was to simply trim half the position. So that is why the first 2 contracts come off when the market runs below this low, because it forms a swing low and then runs below that. I'm running down equity. And then the following contracts I took off once I had confirmation that the market was likely going to reverse at Wednesday daily low. Why did I think the market was likely to reverse at Wednesday daily low? Let's pull up a 5-minute chart and I'll explain why. Okay, so I'm noting how here this candle drove below this candle's low but closed above it. So that's a sign of strength, right? Now when the market does that for the, again, on the following candle, this candle opened. This is literally a 5-minute power 3. Like I'm using power 3 on a 5-minute interval to tell me that the market is likely going to reverse, which is why I got a favorable exit right here on this candle. Because Because I'm looking at this price action right here. Okay, if this candle dries below this candle's low, but it closed above it, that's a sign of strength. Now, if the following candle does that again, and this is the start of that following candle at 10:15, right? The first thing that this candle does is it opens with no upper wick, and it trades down and takes the previous candle's low. Now, usually when a candle opens with no upper wick, it tends to trade back in that direction. So either I'm thinking this candle is going to stay extremely heavy and close as a large down close candle. But in order for that to happen, it has to stay heavy below this candle's low. But it didn't give me any of that feedback because we drove below the previous 5-minute candle's low, but we closed above it, and the market started to retrace, come back inside the range. So I knew that the development of this 5-minute candle was likely to close as an up close candle because it was giving me feedback that I was failing on a drive below this candle's low. And I already had the sign of strength on this candle because this candle drove below this candle's low and closed above it. We opened with no upper wick on this candle as it dropped down. That usually indicates the formation of an up close candle. I just had the 5-minute blocked the entire time because my head was in the way. Damn. And I'm not going to go back and edit that out, so I'm just going to have to run through it real quick again, okay? This candle drove below this candle's low. That is a sign of strength, which tells me on the following candle, if the market is going to stay heavy, I have to see the market stay heavy below this candle's low. It didn't give me that feedback. Like I said, we opened with no upper wick on this candle, and it failed to stay heavy underneath that candle's low and then started to come back inside the range. So I knew that this 5-minute candle was likely to close as an up close candle based on how the previous closed and how we're trading around that range. So I'm literally trading the 5-minute power 3, I guess you could say. That's just a level of understanding that I've arrived at, just market experience over time. Now that probably went over everybody's head. Maybe it makes sense for like one person and they're like, oh shit, that's pretty cool. I'm gonna start applying this. But that happens over and over and over again, and that's how I anticipate turning points. That's how I look to get into trades. So I think it's going to be for this one. This was a long one. But it's a good start to the eval. Here we go. Okay, this is it. Only up from here. Like I promise you guys, like I'm only going to consistently get better and keep improving. That's it. I'm going to stay up. I'm going to stay iron mind. I'm going to stay positive. I'm going to keep winning. I encourage you to do the same. Let's go. This is phenomenal. A lot of great things coming my way. Like I can feel it, guys. I can fucking feel it. Let's go.